Here's the Elliott wave forecast for January 4th, 2011. Basically, in the past few hours, I've been forced to redesign the website, and people were trying to load the widgets, the four widgets that were on the page, and none of them loaded. And people were like, "What the hell's going on?" So they went to the other Wave Genius sites to hang out, and like they were waiting for me to come in there, and I wouldn't come in. So I wanted them to go to this site, and they said the widgets weren't loading, and there's errors and all kinds of crap. So I had to get the widgets that were from the official websites, like the YouTube widget, official, Twitter widget, official, eBay widget, official. So everything should be loading up fine, and it does look familiar to a lot of people because there's another popular website out there that looks just like this, but mine looks better. Anyway, here's the forecast. Um, let's go to the 10-day. Actually, let's see, S&P. I can draw a target for this. Let's see. So, okay, well, this is 3, 4, 5, and zigzag wave 2, wave 3, which you hit today. Let's see, a target would be about 1300 the upside. Highest target is about 1280 to 1300 in the third wave. That would be 1.618 times wave 1 after a zigzag wave 2. But we kind of faded off the highs, so we need to hold at least 1265 to the downside and then rally back over 1276 to set up a continuation of the upward 3. For the Dow, it's like 3, 4, 5, zigzag wave 2, break out above the pattern wave 3. And it faded off the highs too from 11,740 to about 11,670. If it can close above 11,740, or excuse me, 11,720, it would set up a sustainable third wave move. Highest target I have is around 12,000 to the upside. But the retracement is kind of deep, so we need to hold at least 11,615 and then rally back over 11,720 to form a continuation of a 3. The NASDAQ basically had a triangular that kind of broke down, but miraculously, this rally today saved my butt. After it made I mean, it wasn't luck. I really had saw. Let me show you this really carefully. When I saw this on Friday, I was like, "That's a zigzag right there for zigzag wave 2, back to the previous 4, which is so standard and so obvious. Zigzag wave 2, and then it rallied near the highs for the S&P, and that's the third wave setup. That's what I do. It's wave 1, wave 2, zigzag, wave 3, and I saw that, and I said, okay, I'm gonna hold on. I was actually gonna sell because usually January is bad, and from my experience, but I saw this pattern. I saw zigzag, and I saw the pattern break, and the third wave happened, which is great. I love it when it happens. I was looking at this to zigzag in the Dow. Basically, last Friday there was a zigzag, ABC, and then it broke above the pattern around 0.618. And because of this one formation, this three-wave formation, I said I'm holding on. And then boom, third wave. Yeah, I was down about, my calls were down about 5%. And today they're up about 13% of the high. And if you average together, that's about 5% profit, which is good for calls. It isn't amazing, but it's still 5%. And then the stock I made about 2%. I believe is about 2%. Yeah. Anyway, there's the reasoning for my trades today. And if Apple goes up again, I won't look back. But if it retraces again, I'll go back. That's a wrap.